Hello, everybody, and welcome to this episode of Trading Rebellion. Thanks for joining us. We have with us our top senior crypto analysts from Market Rebellion, CJ and Monty, as well as we have Nick Mancini, Chief Community Officer and Director of Research over at Trade the Chain. So, folks, thank you for joining us. Turmoil in the markets this week, and here we are to try to break it down as much as possible. But on top of that, we're trying to also show you where opportunities lie. So learn from the pros and let's get down into it. Nick, take it away, my man.
Let's do it. So in terms of macro, what's going on in relation to regulatory, Federal Reserve, liquidity, we got a little bit more news today, and I'll go ahead and quickly move to the data. So jobless claims were less than expected. I hate to say this because I personally do not want it, but the market needs jobless claims to increase for inflation to be, handled in a proper way. So not headed in the right direction. And obviously more housing starts and building permits, implies a bit of a hotter economy, which is also difficult to manage with the inflation problem. So in terms of data points supporting a 0-point basis hike from the Fed or more relaxed outlook from the Fed, it's certainly not echoed in today's data as it was in the large drop in CPI that we got Tuesday. So the data after CPI is certainly not looking supportive towards a 0-point basis hike. And if we zoom into next week, the big news is obviously on Wednesday, March 22nd, when the next federal interest rate decision happens. And obviously Jerome Powell will give his speech for forward outlook. So this is kind of where the market is looking right now. This is in 6 days time. So, not a whole lot of time, and it will come up very quick, I think, in relation to our lives and the markets. So
Nick,
let's
stop there for a second real quick. Let's stop at Jerome Powell because there's been a reversal of sentiment as far as what the interest rate hike is going to look like. Before what happened with the banking crisis last week, we were pretty steadfast on 50 basis points in the FOMC. Now, with everything that's gone on, all the turmoil in the markets, I would say that we're either going to be 25 basis points or 0 basis points. But break it down on why that reversal's happened, if you could, for the folks.
Yeah, certainly. And that was definitely what I was going to get into. So prior to CPI, the outlook was that the Fed needed to do more work to dampen inflation. And of course, prior to CPI, we had Silicon Valley Bank, Signature Bank, Silvergate Bank, obviously having their woes. So couple, quote unquote banking crisis with positive CPI numbers, meaning CPI is lowering, and the market starts to think, are we back on a quantitative easing cycle? Is the Fed going to stop tightening, stop sucking liquidity from the market? So in that outlook, prior to the data that we got today and maybe the feelings that we had yesterday, the market was betting on a 25-point basis hike or a 0-point basis hike. I believe it was like over 50% in terms of a 50 basis point likelihood prior to the banking crisis situation. Now we're at a 0 to 25 point. But the issue in relation to betting on the Fed for next week is that the European Central Bank, which is obviously dealing with their own banking crisis, they have Credit Suisse staring them down, and of course similar small banking woes to America, they just rose interest their central bank rate by 50 basis points, which was a bit of a shock to the markets. They definitely were implying that, but everyone was trying to call their bluff. So the European Central Bank is taking a QT, quantitative tightening stance, even though they're providing some liquidity to banks. And now the market is trying to, bet either with or against the Fed for next week. So current consensus is 0 basis points or 25 basis point hike. But now the thoughts are creeping in. If the European Central Bank is going to take this big of a step, and they're typically a little bit more dovish than the US side, then what does that mean for Jerome Powell's job and for everything else? So inflation is going down. Unemployment is slightly rising, but of course, we do not know what banks will fail, if any more banks will fail, and what that means. And I think the Fed is willing to take us to the edge and risk more breaks to deal with inflation. And I'm certainly not going to bet against them right now until I get an indication of some dovishness from them.
All right, move forward then. Sorry to interrupt. Got to explain to everybody what's going on.
No, 100%. And that's really the explainer. And I think probably the biggest chart that you'll want to watch, and I think Monty and CJ are going to go over some equities and more traditional assets on the heels of this, but this is the dollar index. This is DXY if you want to pull it up on TradingView or whatever charting app you have. And what I'm looking at right now is we obviously have these lows from back in January, but I'm considering, basically 105.5 to 105 as a quote unquote demand zone. So if price breaks above 105.5, if it confirms above that on the daily candles, I think you're pretty much going to see a vacuum squeeze up to 108.9 or around 109. This has basically been hovering in a kind of an inverse head and shoulders fashion for several months now. And of course, if the FOMC meeting breeds a 50-point basis hike, you're probably going to see this skyrocket. And if the dollar is heading higher, risk assets are likely heading lower. Now, on the off chance that Jerome Powell does a 0 or 25 basis point hike, maybe the dollar goes in the opposite direction and sends risk higher. But for right now, this type of formation, this type of trade, you typically look for it to break the neckline and move higher. So that's something I'm very closely tracking into next week in relation to broader risk markets.
All right. Well, CJ, do you want to take us to a happier place, or is it all doom and gloom on your end as well?
No, I mean, depends if you're a bull or bear, right? I think a lot of bears have been experiencing doom and gloom just because of the massive squeeze we've had. And I want to talk about positioning. We have all of these macro events that captivate our attention. But in many cases, I like to look at how market participants are positioned prior to going into these events. Like last CPI was a good example. I think even if we would have had a bearish number, we would have had, an initial smackdown and then rally up higher. And since we got, a number that came in with expectations, we just kind of rallied, which was interesting. But I want to talk once more, and let me share my screen here. Well, first and foremost, before I get into the COT data, let's just go back to the zero hedge update on live cattle futures. As of now, they've marked the top, so we'll see. But just providing an update from our show last week, if you watched that one. I did cover a bit of this. We'll see what things go from here. But, this theme of contrarian trading, it's not just applicable to commodities or cattle. I'm going to talk about the exact same premise when taking a look at the NASDAQ as well. So one thing that's been really apparent and interesting to me is that the NASDAQ has been outperforming regardless of price action to the downside or to the upside. So typically, you'd say, oh, well, the NASDAQ is just higher beta, and that's true. But when it's not, underperforming on the downside, it's actually outperforming. That's something to pay attention to. So why did the NASDAQ outperform and rip relative to these other assets? And when we look at COT data, it's because this particular market had some of the highest short interest of all of the major equity indices. So when you already have max short interest at the lows and you start to get a squeeze from that level, all of the bears are trapped. And think about how bearish and it was such a great reason to sell. I mean, at least people thought it was a logical reason to sell. But when a trade gets crowded like this, it becomes very dangerous to follow in that path and be in a crowded trade as well. I feel like that only kind of works in crypto. So, let's compare this now with, ES. Speculators are still short, but they're not as short. And that's why I think we made lower lows and have seen less resilient price action in the S&P 500. What about the Dow? Same type of story, right? Speculators are short, but they are not as short as NASDAQ. And I think that's why it's been outperforming every major equity index. This is another really good example here too on the Russell. The Russell has been the worst performing index, and it has also had the least amount of speculator shorts. So when you have low short interest and the market's bearish, pricing keeps going down quite a bit. So I think that's really interesting, and that was a really good example to like show how positioning really matters, especially when looking at these broader indices. In terms of my thoughts on Bitcoin, I'm kind of confused right now. I'm flat, and it was the Warren Buffett quote. Be fearful when others are greedy, and greedy when others are fearful. And when you're confused, just do nothing. I guess. I think it's missing that third element.
Well, I mean, the capital preservation is exactly that. As long as you're not losing money, you're likely outperforming many others in the market. So it's a good thing to keep in mind.
Yeah, it's interesting times for sure. It's times like this where you're, to CJ's point, you don't have enough conviction one way or the other. And Nick, you and I have touched on this on our daily trading. You're not sure whether to go long, to go short, or what to do. And sometimes it's really hard to just sit on your hands and do nothing and see what plays out. Monty, what do you got for us, big guy?
Well, speaking to, fear and greed, I want to start by talking about stablecoins. And I think they have been probably the largest ripple that we felt from the regional banking collapse. So if you could go ahead and pull up my screen real quick. This is USDC dominance. Circle's stablecoin, their dominance of the market currently sitting around 3.59%. For a time, it looked very similar to the DXY. And because you can basically look at them as the same thing, right? Like Nick said, for the DXY, when this is trending up, it means people are going out of risk on assets and into stablecoins. Therefore, you expect high beta assets to depreciate. But stablecoins are very much under attack right now. And we've had FUD around Tether, we've had FUD around USDC, but not to this extent. And they're dropping pretty quick. And you have to ask yourself, where is this capital going? Because, it's not like, it's going to the equity markets or it's just going in back into US dollars. I think the answer has been right in front of us. I think a lot of it has actually flown into the quote unquote hard assets, being Bitcoin and ETH. I think, CZ's tweet, to follow up what we talked about on Monday's episode, this $1 billion industry recovery initiative, I think actually really did make a big difference in terms of, people's perspective on the market. I feel like it gave them a lot more confidence in investing in Bitcoin as a hard asset, as well as ETH and BNB. And we are certainly seeing that from BNB. That's been the best performing asset of the day. And I think this is one that can continue to perform well because it's got a few good things going forward. One, that initiative that I just mentioned. Two, some positive news. This was negative news that came out yesterday. The government says that the Voyager Binance deal should be halted, but some good news came out. This New York judge, Michael Wiles, says that any protractions with the deal will harm the interests of Voyager's former clients who are waiting for the return of their funds, essentially stating that the customer getting their money back should be the priority. And I think that could actually really build a lot of loyalty for Binance for bailing out some of these Voyager customers that lost money. So, looking at BNB, obviously it's already up, 7.5% today. One thing I would look out for, though, is a possible break above this level of about 335. I wouldn't enter, before that. One thing that has been pretty evident is that this has been a level of resistance here, level of resistance all the way back here. You could even go all the way back here, and you can see that this has been a point in which a lot of BNB has exchanged hands. What I want to see is, what you typically would want to see in a breakout where, we get above this level, we see a candle body close above that level, we come back down, confirm this level as support, and then continue higher. This is where I'd be looking to buy, on that bounce off of support. And the reason why that's important is because look at Bitcoin, right? It bounced up above 25K, but if you bought this wick you got burned because you didn't really wait for confirmation that this level has flipped from resistance to support. So that's what I'm waiting for BNB. I think we're going to get that pretty quickly based on, the amount of capital that CZ has been, pumping into Binance and all the good moves they've been making. So, this is one play that I think in the sea of, crypto assets, the only three things that I have any interest in holding right now are Bitcoin, ETH, and Binance coin. Other than that, I'm pretty much sidelined in cash. But, this kind of setup is what I'm going to be looking for as we head into the weekend. So that's all I got from that perspective. So I'll pass it back to you, Alex.
No, very cool, very cool. BNB is definitely hot and the subject of a lot of things going on right now. So thanks for bringing us up to speed.
Really quick on that, on what Monty was talking about, I wanted to follow up on stables because I noticed something quite interesting. Alex, if you wanted to share my screen really quick. So I was just, doing my eyeball charting on USDT dominance, and obviously for anyone watching, this is not a tradable asset. So, the TA is a little bit witchy, if you want to call it that. But I think for anyone who knows general TA, it's pretty straightforward here. We're in a pretty fat range for the past, nearly a year. You got a some rising triangle here, rising wedge, whatever you want to call it. And we had a nice bounce on the trend that's been valid since November of 2021. So I just wanted to, just from your thoughts on a weekly perspective, if you were, a betting man, do you think with the context of FOMC next week, USDT dominance breaks through the trend and kind of falls back towards August lows, or do you think we end up, continuing higher and reattacking those highs?
The reason why I am leaning towards a breakdown below that line is just because of everything that's happened in this last week in terms of regional banking crisis and the effect it's had on stablecoins. Of course, this is the USDT dominance chart, but the USDC chart looks a lot different. Circle did have pretty significant exposure to SVB. Of course, that really led to a lot of fear, and I think that fear is translating into other stables as well, like USDT. So, yeah, that trend is still intact. You're right on that. And if TA were to work out properly, we would see a bounce from that level. But I think just because of this unprecedented regional banking crisis and the effect that it's had in the stablecoins particularly, I'm leaning more towards it breaking to the downside.
Yeah, I think this is one of the tougher formations. You basically got, two doji wicks back to back, on either end. So there is no easy trading. And I think it will probably take until mid next week around FOMC for that to either show a strong, pop from the trend or break below the trend. So I am kind of, I have a feeling we could probably see another wick like this up and then it cracks lower. Like we get some sort of fake out, crypto dips a little bit, great buying op, and then we rip again. So I think that would probably be more likely than just a straight drop because crypto is going to try and scam us even when we think it's easy. So, but I do agree with you. I would be shocked if this really started spiking, into the spring.
I don't think it's going to necessarily spike, but I will tell you the dominance of USDT sentiment over other stables right now is at an all-time high, just like it was back in 2017, 2018, when we all just used USDT. It used to be the only currency out there that anybody would use, and Asia's big on it.
Don't you guys miss
remembers only?
Sorry, go ahead.
I would say, who remembers only trading in Bitcoin pairs in 2016 and 2017? Like, remember that?
Oh.
And you'd have to be tracking like 3 charts at the same time because if Bitcoin was spiking, your shit coins were dying, and vice versa. That was fun because the cycles were very fun because Bitcoin, it was so obvious that Bitcoin pop, Ethereum, alts, and then recycle all of it. It was. Those were the
days, man. The youngsters these days don't realize how difficult it was to trade back then.
Yeah, when Ant Shares was rebranding to Neo, and you were only trading against the Bitcoin pair on Bittrex. God, those.
Do you guys remember Roblox and then turned into Nano? I think Roblox
Oh.
or Ray
Not
Block. Sorry, Ray Blocks. Wasn't it?
Yeah. Okay. I was about to say Roblox, but no, yeah, that makes sense. Yeah.
All right, I wanna really quickly touch on some things in the crypto market as we talk about it, and I'll do this again in our Twitter Spaces that I'm doing tonight. But Bitcoin 24/7, right above it, neutral sentiment. Total trading volume in the crypto market 65 billion. That's down from about 85 billion yesterday, but we'll see if that creeps up by the end of the day. For sure. And just to give you an idea, folks, it's been trading around the 45 to 50 billion dollar range since January. So the last week, it's been nearly double by 6 p.m. Eastern time. Going to the stables, here's the 24-hour on stables, and you can see it's pretty even as far as inflows, outflows, but when we've been seeing a lot of big outflows in 1 hour increments. Here's one for 90 million. Here's another one for 80 million, another one for 75. And these are all very repetitive. So it's interesting to see the different fluctuation of inflow outflows on stable coins. But just, keep an eye out, take a look. Here we got Bitcoin, we got the sentiment versus price, and you could see, the rise to 26,000 was great, man. I hope a lot of people made money in that. I don't know. I'm mixed emotions right now, guys. I really I have this irresponsible short going on in Bitcoin. I don't want to get out of it yet. So I need somebody to dump a ton just to help a brother out.
One thing on those sentiment charts, if you are a TTC member or you're exploring TTC membership, Alex, if you want to quickly pull that back up, just something that you can use to potentially track longs and shorts. I will say, obviously bullish sentiment is a good thing, but overextended bullish sentiment is very similar to overextended price. And it is very rare to see daily sentiments above 80, especially into the 90s. So if you are, trading off of sentiment and you start to see price dipping into the 90 or 90 plus level, typically that will be a good quote unquote take profit level. Obviously nothing is 100% and there is no exact science in terms of tracking this data, but more often than not, if you're tipping into the 90s, especially for several hours on daily sentiment, it is likely that price will reverse in some way, shape, or form. Now, if you're long from 20 and you're selling 25, you're all of it, that's your own type of trade. I always recommend, pulling half, setting your stops at break even or above where you entered, especially if you are very profitable on your trade. But just as a rule of thumb, overextended sentiment, very similar to overextended price, and is a good idea to potentially take profits when it is looking like that. So just something for any of our members who may be using the product.
Yeah, and Alex, if you could pull up that Bitcoin sentiment chart one more time. One thing that to me is kind of evident from just looking at how it's performed over the last 7 days here. Like, we had that big spike in sentiment, like Nick pointed out. The initial move up in sentiment when we went from negative to positive was met with some nice positive price action, carried us up to 25K. But look at how flat it's been, even with that fall off in sentiment. I find that encouraging. I think that's also part to do with the, injection of capital from Binance, and their announcement of buying Bitcoin. But look at today. It looks like sentiment is starting to turn up while price is, relatively flat. I think that's a good sign in terms of what we could see tomorrow and into the weekend. So just interesting to note that sentiment's turning up while price is still, right below that 25K level.
Yeah, and you can use that zero neutral level as almost kind of like a support line, if you will. If you like notice the chart kind of deviates under it into bearishness this morning. If you want to go back to the daily and the 7-day, Alex, you'll see that today we watched sentiment deviate lower and then lift back higher, which, if you would have actually longed it when price was deviating, or if you would have longed when sentiment was deviating lower, you would be in a profitable trade right now. So I'm not saying, take those small scalps based on the daily, but you can use that zero line as a bench or as kind of a support line. And you can notice earlier this week, it deviated under it, had a double bottom. lifted higher to 25K, dropped off, deviated under it, and now we're trying to reattack the bullish sentiment. So not saying, if you were to try and get long, that could be a fun signal for maybe a 25% or 1/3 entry into a long opportunity. But you can treat, the sentiment data very similarly to technical data, as long as you have some technical analysis acumen.
CJ, I know you've been wanting to say something. By the way, I want to comment. I miss the robe you used to wear and sitting, lounging back. So
That was just bull market shenanigans. I don't think we're going to be these days. But yeah, I mean, I think there's a lot of things you can look at in terms of sentiment. I like to look at put call equity ratios, but I really like that sentiment that you just showed in Trade the Chain, because like you can see how prevalent it gets at the top there. Like Nick, you were mentioning like the 80 to 90 level, and if you compare that with confluence of like price beginning to decline, I think that would be a great contrarian signal potentially. So that's something I would love to follow. Also, like I think something that would be cool is like looking at the rate of change of like a spike of like that, because like you want to see when people are really euphoric and intense, and if you can quantitatively display that, that's really cool. And
yeah, Alex, if you want to pull up the dashboard, we could show them like sorting by trading volume and sentiment, because I know a lot of people will use the trading volume aspect in other apps, but we obviously have a very useful tool here where basically if anything is increased trading volume more than 50%, something is happening. There's a reason more people are trading this now than they were yesterday or the day before. So that's a really good one. And then tweet volume is very similar to trading volume, and tweet volume can potentially precede trading volume. So if you're seeing increased tweet volume, but you're not seeing that trading volume spike, well, there's a reason more people are tweeting about Phantom today than anything else. So, maybe it would behoove you to go check on Twitter or any news sites into what's going on, to then understand that, because, tweet volume a lot of times will precede the trading volume and the sentiment, because sentiment is born from the activity that happens. So, those are two really good tools to track potentially, up and coming coins or recently hot coins.
Well, what do we, before we wrap this up, let's talk about the banks real quick. We had FRC, First Republic Bank, halted this morning in its trading. Hearing rumors and rumblings that it is putting itself up for sale. Hearing further rumors, it also has a 25, well, it's not a rumor, they actually came out and announced it, $25 billion hole in the balance sheet. So a lot of things that are suspect now that the tide has gone out, right? I mean, we have DOJ investigations into Signature, into SVB. There's this $25 billion hole in FRC. I said it yesterday. Why is it the regulators come out of the woodwork and do their job after the crisis has hit? Wasn't this supposed to be the whole point of being registered as a bank? I don't know.
I love Barney Frank's interview that we posted into the Trade the Chain community. He had an interview. He was on the board of Signature, and if you guys don't know, he was one of the authors of the Dodd-Frank Act. Well, the guy, he was one of the authors of the Dodd-Frank Act, which we know was the regulation post 2008. And he sat on the board of Signature and kind of lampooned, if you will, the regulators and the SEC for their actions in which they took control of Signature and failed to manage, obviously, the situation before it got to where it was in terms of being a legitimate crisis, which Alex echoed. So it's interesting to see what the regulators did versus the individuals who legitimately authored the legislation to protect against these exact types of situations. And if the guy who authored the legislation is at odds with the regulators, we have a much larger problem in front of us that I think relates to a much more focused political situation than it is an actual economic or, growing the economy situation. It seems like it's more political grandstanding and posturing than it is we want to help everybody and create the most equitable way to do so. And that's, I think, what's been pissing me off the most.
Also, a little collusion sprinkled on top there, right? I mean, we're having joint press releases from multiple regulators in one press release. I mean, I've never seen that before. But I think the next week is going to be really important. I think it's going to be decisive, and what happens during that week will dictate what happens to our market in the short term from a crisis management point of view. But CJ, Monty, I mean, you've been watching the fires burn like we have. What are your thoughts?
It'll be interesting if everybody gets.
And does it affect cattle?
Go ahead, CJ.
That's why I like to trade all markets, because I like, at the end of the day, I don't know what the regulators are going to do to crypto. There's got to be a plan B. So that's all. But yeah, go ahead, Monty.
When it comes to any bank or financial institution that's managing your money, the most important thing is probably trust. And I feel like trust right now amongst regional financial institutions is at an all-time low. And to kind of provide a parallel for crypto, and I think one thing that's holding Bitcoin back right now is legitimate on-ramps for people that aren't as technically sophisticated. We got up to 68K because of all these centralized exchanges that made things so easy for people to inject capital and and bid Bitcoin up to 64K. Now that trust is gone. Like FTX, Voyager, it's all of these have blown up, and now the banks are blowing up as well. Trust is even more shaken. So I feel like until we get a more reputable on-ramp for Bitcoin, for people to buy Bitcoin that isn't necessarily, technically sophisticated, or you don't need to, jump through hoops, then we might be kind of stuck here under 25K. But, like to CJ's point, I don't know what the regulators are going to do. It's impossible to predict what they're going to do. Like you said, they always seem to be taking action after the fact. And I think based on what we've seen in the last week, there needs to be some significant action taken.
I saw CJ grab the mic, so I'm being quiet for a moment to see if he says anything.
There's a cattle chart coming soon.
No. It never moves. It's just a slow grind up or down. It's like an asset for your grandpa or something. But in regards to FOMC next week, it'll be interesting to see the positioning going in. I could imagine if we start to come off a little bit here in the NASDAQ towards the end of the week, shorts will probably pack up. We'll probably stack up.
Kramer long NASDAQ. So,
all right, Kramer is not even like the worst at that. Like Kramer is not that bad. Okay.
All right. If Kramer tells you that he's shorting cattle tomorrow, are you closing your trade or not?
I've already closed. No, because like the whole thing about CNBC, there are many people who are far worse on CNBC, but
they don't have an ETF named after them that's outperforming.
Because they're not as famous, right? They're not as famous, and they don't get paid as much, so people don't pay attention to them. But there are folks on. There's actually a website where you can look at the track records of CNBC calls over time. All of them are like 40% efficacy rate if you go a month out. So and I know this in my own trading, like 40% of my trades are probably going to work, 60% are not, but the payout ratio from the winners to the losers is going to be 4-1. So talking about trades and Kramer could be a really good trader. He was one of the best traders on Wall Street for a time. But when you're talking about ideas every single day, you're going to look foolish. Because that's the nature.
He literally tweets direction, like literal, like momentum direction daily, which I find fascinating because there's really no need for that. But if it gets some like clicks and likes,
CJ's correct. But I said CJ's correct, but we just have nothing to make fun of if we didn't talk about it. So
good news. Hold on. As of 2 minutes ago, 1 billion USDT minted at Tether Treasury.
All right.
That was a whale alert from Twitter, also in the TTC community.
Real quickly, going back, I want to talk about what Monty said just before and why we got to 68,000. Right, it was capital efficiency. It was the ability to come in and leave the crypto market with ease. Now now it's one of the largest choke points, right? So I firmly don't believe that there's going to be enough capital within the markets to move, let's say, Bitcoin meaningful for quite some time. And what the regulators did this past week and what they're going to do next week as well. And I don't care what you say, but there's a lot of stuff that's coming out, and what Barney Frank has mentioned about crypto and regulators, and then what the statement that came out saying that the buyer of Signature Bank has to guarantee the closure and no business dealings with crypto moving forward. I mean, that's remarkable. So it's kind of like we just had this big battle on the battlefields here. They blew up a bunch of bridges over the last year. There was 2 remaining. We're trying to escape, and they just blew those up too, right? That's what the on-ramps look like now. So I don't see any meaningful movement. I don't see any, when Lambo talk, when Moon talk, or any of that crap for a while. And hopefully that, all those shenanigans die anyway, a painful death. But CJ?
I mean, just to play devil's advocate a bit, that's completely true in terms of sentiment in the West, but I do think things are a little bit more bullish in the East, specifically China, Korea.
But why though?
Tokyo.
Because they're crypto native. They're crypto
Exactly.
native.
Yeah.
So until Westerners can learn how to be crypto native, I don't need a bank. If I got everybody to accept crypto, I would live my life in crypto.
Bro, I'm pretty sure there's
folks.
I worked at Deutsche Bank back in 2017, and back then I think the numbers were like 10 to 20% of customers still only use checks. No credit cards, barely any cash. And this was in 2017. So, the West has a huge infrastructure problem and adoption of just future state technology, because the West or the East is doing everything on WeChat or WePay or whatever. They pay they get paid from their jobs, they pay their houses, they pay their bills, one app. In America, you have 20 and you still can't even pay half the things you need. So, that it is very much an outlook of adoption. So I think Alex and CJ are both right on both of those. It's just which narrative is gonna win. And I think on that topic, I agree with Alex. You're probably not going to see any when Lambos, the 10Xs are going to be few and far between. But I still think there's going to be a cyclical nature to crypto, and the narrative format will still run to some degree. AI obviously outperformed everything. That was a great run. That could still continue because GPT-4 is coming out, and the AI updates are going to be very swift due to the speed at which that technology evolves and where we're at. So I think that narrative will still run. Arbitrum and L2s, Arbitrum's launching their token, I think, next week. And the L2s will probably feel good from that token launch, similar to the NFT tokens feeling good from the Blur launch. So there are still a few metas and narratives to play, but like Alex said, it's not going to be, buy and hold for 6 months and be a millionaire. It's going to be a little bit more actively managed and shorter narrative sprints.
Which is fine, because I have this directional position put in on perpetual futures, and the market is so damn sideways. I'm literally making income from my net funding rate. I'm literally making money by not closing out the trade and this thing going sideways.
Is that on your Rollbit account?
Hey, no Quinco today. I'm strictly Didex till the afternoon.
One thing we should touch on in relation to what Alex mentioned is funding rate in relation to momentum, and exactly where price is in relation to resistance and support, because there is some nuance in relation to the price of funding, and especially where price is in relation to the broader technical analysis chart. So we should go over that over the next couple of weeks and update people for that, because you hear a lot of that on Twitter, but no one ever really dives into what it means.
Agreed.
Oh yeah, understanding funding rates is so important. So many people don't understand that when they're entering a perpetual futures position, but understanding that really is one of the key pillars of making money trading that way, for sure.
I know a guy who stayed into a ETH long.
I remember this long.
for 3.5 months, 4 months, and it literally racked up $18,000 in income off of positive net funding rates.
That
There's
was
some
back during
interesting-
that was during the 2.0 upgrade, wasn't it?
That was during the 2.0 upgrade. Yeah.
Yeah.
So,
There are interesting delta neutral funding strategies that can be explored, but I don't
Yeah,
know.
I mean, I think Alex, your position of your idea of taking a short trade here, isn't a bad idea. We're green on the day, heading into major resistance. You know where to cut it if it goes against you. If we get above 25K and start to consolidate, you cut it. But I think that while you're getting paid a little bit of a premium, we're pretty widely diverged from a moving average. I think having that exposure is actually a pretty smart play, and I hope it pans out for you.
well, thank you very much, sir. I appreciate that.
Yeah, and anyone from a long down from like 20, 21, 22, if you're not hedged right now, you should probably think about it. Don't want to tell anyone what to do with their lives, but if you're that much in profit and you're not hedged on an open trade, then I would suggest thinking about it.
All right, folks, that wraps it up for us today. We will be back next Monday at 2 p.m. Eastern time, unless something devastating happens. Then we'll always call an emergency session if we need to. But thank you very much for tuning into Trading Rebellion. Until next time, we'll see you, and hang on to your handlebars, folks.